Hi everyone, today let's talk about bond investing. I still think there are better days out there for bond investors, and I've been talking about it for a while, so let's hit that. And then we'll get into all the usual charts and data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So why are better days out there for bond investors? We've been talking about this on the channel for a long time, but let's get into it some more. Government bonds, they say the past few years have been rough for people investing in bonds, fixed income assets, with rising inflation, aggressive interest rates, and general economic conditions. But now we have inflation that is under control. Economic growth has been slow but steady, with little reason to suspect widespread recessions. That part can be a little bit debatable, but it seems like the conditions are good for bonds. They see here corporate profitability continues to be robust and it's expected to stay that way for a while, allowing these companies to continue to pay. Their leverage and interest ratios continue to be at comfortable levels, and we don't expect too much effect from the new White House. We could see some tariffs, reduced migration that could lead to some kind of resurgence in inflation. So maybe the Fed does make some adjustments on the interest cutting cycle, but realistically, I don't think that's going to happen. I think those fears are a little bit overblown. Trump did put in tariffs last iteration and we did not see out of control inflation or anything like that, but people keep saying it, so we'll mention it here. But how do we get into this trade? We've been talking about it for a while, and I definitely will go into this a little bit more, I think, on my M1 account where I do buy some bonds. And I've been buying basically the whole bond market as well as some government bonds, so we'll talk about that more in another video. But in terms of opportunities, high quality short-term bonds, commercial paper, fixed income instruments, all of these things are good, steady income assets. Where is the sweet spot in the bond industry? They're saying that triple rated B bonds, which is the lowest grade of investment grade, along with double B, which is your high yielding, consistently offers the best risk to reward ratios. So things like J and K, like we talk about in nearly every video, high yielding bonds, very close to that investment grade with the high yields, but still relatively minimal risk. And so their big takeaway is there is $6 trillion sitting on the sidelines in the investment world, which seems like a massive amount of money, could absolutely drive markets into a massive run up in any sector that people start to pile into. But fixed income assets, compelling case, especially in the recession-free soft landing environment. And personally, I just think stocks are a little bit expensive for the medium to long term. We could see a lost decade off of these valuations, and I think these are better alternatives. These, and don't forget about REITs. Those are also pretty good, relatively fixed investments. Looking at fear and greed, you can see we stepped down to a 58 from a 67 a week ago. You can see this has been downtrending a little bit here over the past couple of weeks, really since the beginning of December. Still extreme greed on momentum. Markets have been going higher, but the indicators are going lower. Strength going lower, breadth rolling over. Put call ratio is bouncing a little bit, so again, contrarian metric there. Volatility not giving us a whole lot. It is at an area of support. You can see it's in the same zone we were in back in May and July. And then safe haven demand continuing to go down. Junk bonds continuing to rally. Still fear on both of those. Moving over to the AAII survey, what a shift here. You can see we went from a 37 up to a 48, which is a very high level. Last time we were at a 48, 49 area. That was where we start to saw a little bit of a decline. Now we're back into the 48 from a 37. Bears getting squeezed basically to historical averages. Bulls very much above historical averages, and the neutral there getting squeezed. Again, potentially a contrarian metric, but markets have been very bullish. Moving over to seasonality, you can see seasonality is supposed to be a little bit bearish here into the Monday, Tuesday, Wednesday, all the way up until the Monday of next week. And that is where we are supposed to see the bullishness come in through the end of the year, mid-month into the end of year. Gives you that January effect, Santa Claus rally, whatever you want to call it. But for now, a little bit of weakness into that period. Not a lot, about 1 to maybe 1.5%, depending on which market you're looking at. And then looking at the calendar here, you can see bullish for the Monday. Small cap strength starts mid-December. A little bit of data here, CPI, PPI. I think inflation's pretty much done at this point. Really not a lot for this week. And then next week is when you get that interesting stuff, quad witching, a little bit of bearishness in that week. The other thing to watch out for is sometimes that Wednesday, Thursday, you can see some pretty bearish markets ahead of that quad witching as the market makers try to balance out their books ahead of the witching event. So something to consider there. Maybe we see a little bit of vol in that 11th and 12th time period. Moving over to the economic calendar, basically nothing here for the Monday, really nothing for the Tuesday either. 3-year note auction. Wednesday, you do get the CPI data, 10-year note auction, federal budget balance. A little bit of OPEC news there as well. Crude inventories have been interesting, super negative there. And then looking at Thursday, you got the PPI data, core and headline. ECB, are they going to cut ahead of our cut? And then you get Fed balance sheet, which has been declining for a long time, and it continues to kind of accelerate, in my opinion. And it has been accelerating a little bit, and you can see here for the Friday, basically nothing, imports, exports, a little bit of data there, nothing crazy. So basically just inflation data this week. Moving over to Max Payne for the Friday session, you can see not a lot of options, very low on the put call ratio. Put wall is 590, so that's plenty of downside potential before we hit any major put walls. Call wall here at 606. Currently price is already above that level, so again, indicating a little bit of potential bearishness. That didn't really matter this last week, but it is something to consider. Top of the puts right now is in that 610, 611 area, so that gives you maybe $4 of potential upside, but again, about $17 of potential downside into this 590, 593 area. So small potential to the upside, risk is still to the downside. And then looking at those daily closes, you can see it is very, very slightly bearish up until that Friday, which is the 590 area for Max Payne. Otherwise, throughout the week, Monday, basically flat. Up until the Friday, basically flat, about 0.5% lower. And then the Friday is that bigger move down potential. So pretty neutral, pretty range bound from what I could tell on Max Payne. Moving over to the charts, starting off with the S&Ps, I adjusted this kind of intermediate trend line a little bit here. You can see it marks the top back in July. I did bring it down slightly to mark the top in March of 24, and then again July of this year. And then you can see we touched it on the high from 4 November, where we had the down week to follow, and you can see we're very, very, very close to that level. We did just barely miss it. This trend line honestly probably could go a little bit higher if you did bring it right to the closing price of these two candles in here. So we missed it here. We're close to it. And for next week, that's going to take you to 61.43. Momentum still bullish. RSI not quite overbought yet at a 68.50. And then looking at it here on the daily chart, you have that upper trend right in this zone here. Again, 61.46. Maybe just a little bit lower for next week based on the daily chart. Momentum stepping down, RSI still super overbought. And then structurally here you can see high, higher high, higher high with a low, higher low, expecting a higher low off of this kind of topping pattern. Extension here. Last time we were this extended, we did have a couple of days of pullback. And even if you did, your support zone would probably be this previous high, 21 EMAs right in that zone. It'll trend a little bit higher over the coming days up into that 6,011 area. And then stepping down to my SPY charts here, you can see we're looking at this kind of confluence of trend lines marking these levels here. Current support for the Monday is going to be that 607.33 area. If we get the continuation up to the trend, you do have a little bit of room there. 612, 614.50, somewhere in there. Momentum still fading again, still overbought, just like we saw on the SPX charts. You still have this gap left back to the Tuesday of last week, where we gapped up into the Wednesday, and that gap fill close would be 603.91. So maybe we get a topping pattern, come back, fill that gap based on that previous high, maybe even come back and touch that level, 21 EMA VWAP, trend into this area as we get the pullback, bringing you into that 600 level, hold that 21 EMA, get the continuation from there if it's going to do it. But for right now, current support, like I said, 607.50 or so, waiting to see if we hold that or break as we kind of chop sideways into that Thursday, Friday sessions. Then moving over here to those Tasty charts, you can see we did get 2 bullish weeks in a row. We're still hovering just above that second ATR band. Again, that is sitting in that 6,067 level, right in line with what we talked about in the previous charts. If we were to see a pullback into that zone, touch that level, and then kind of get the continuation. Current upper trend is at 616. seen, again, kind of in line with those trend lines we've been talking about for that medium target if we did get the break higher. We haven't seen volume since back here on that 5 August week, and since then it's been basically straight up. If we do get a volume spike, that's probably going to be the top of the candles. And then looking here, you can see we are getting that ATR trailing stop moving higher. It's still all the way down at 564.40 based on the weekly chart. And then looking at that daily chart, you can see the ATR bands are contracting, but we're still trending higher. We're still well off of that 8 EMA. Everything says still bullish, still trending higher, sitting right on that second ATR band, 606.76. If that breaks, the 8 EMA is your next level, 603.85. Momentum still bullish. Again, we haven't seen volume for a while. We're still trending higher off of this big down move here, continuation. We talked about some volume spikes in last week's weekend video, but that has not come to fruition. We've just continued to go higher. You can see the ranges are trending together a little bit on the ATR bands, but your upper band target on the daily would be 611.26. Of course, if we were to push into that area like we did here, this would continue to trend up over the coming days, but continues to look like a melt up. Really no changes to that thesis. Moving over to the NASDAQ here on the weekly chart, this did exactly what we thought it was going to do. Basically gapped just slightly and then ran the entire week, all week straight up to the trend line, and now we're at the key resistance. You can see this trend line is not super strong. You can see it marks the bottom perfect here in April. Held the levels, kind of pushed through it here, continues to hover just below that trend. Are we going to reject off it like we did here on the 11 November week? Certainly a possibility. Let's go ahead and extend out this other trend line here. Right there, if we do break through this trend line next week, your next trend would be the 22,531 level, and then you can see from current price up to that would give you about a 4% move. That would be a pretty dramatic week. This week was 3.31%, momentum bullish, RSI bullish, and the NASDAQ definitely did outperform more than I expected it to this week. Very, very strong here, although I will say the candle does look kind of similar to this setup here. So you get a big up candle, a little bit of choppiness in here, up candle, choppiness in here, continuation. That was kind of the top, big wick rejection from these trends in here, and then you saw the move down. So that's the comparison that I would be looking at right now. Momentum stepping really strong. If we do get the step down doji candle at the resistance here, that resistance would be 21,788 or so, somewhere in here, and then you would see step down on momentum, maybe flat line on momentum, and then you start to see this roll down. In terms of RSIs, we are continuing to see this triple divergence. Peak RSI was back here in July. We saw lower RSI reads February, March timeframe, another similar read here in July of this year. And now we're at a lower RSI read with a higher price. So clear divergence in price on this weekly chart. And then stepping down to that daily, you can see we didn't quite get to the trend line on the daily chart, marking this level perfect here in November. Missed it by a little bit. If we get the continuation up to that, that would be 21,807, somewhere in there. And then stepping into that Q's chart here for the daily to look at the trend a little bit closer. For the Q's pricing, that would be the 532.75 level. That's the one we've been watching on the regular daily videos. You can see marking this top here, kind of overthrew it, but never stayed above it back here in September. Marks the top perfect in November. And then once again, if we do get that continuation to this area, like I said, that's the 532 area. Momentum bullish, RSI overbought at 69.99, basically overbought already. If we get the push, that would be the blow off top, in my opinion. Get the really strong touch, rejection of there, something like this, where you get the key, touch, consolidation, breakdown. That's what I would be looking for. So if we get there, that's the top. If we miss it, probably going to show a little bearishness back down to this 514.92 level. Do have some key supports in here though. Overall, still looks bullish like I said, but definitely some factors that give you some hesitation, some things to watch. Moving over to the NASDAQ here on the Tasty charts, you can see that same week we've been talking about, we did get through that second ATR band. That's at 523.57. Your upper band is in the 543 area. We've been talking about that zone. Again, fits kind of with this trend line, marking these tops in here, marking these tops. And then if we get there one more time, it's going to be about another $17 or so. Again, it's been very aggressive. ATR trailing stop moving higher very strongly on this week, suggesting that we're going to get more continuation into the next week. And then looking at that daily chart does not give you nearly as much room. You can see we hit the upper band, ended up being the top of the move. We are just a breath off of that level already here. 528.55 is the current level. That's only about $2 higher from current price. Strong up move already into this zone. another $2, maybe we overthrow it a little bit. But before we get to that weekly high, we're probably going to have another pullback, another higher low setup, and then continuation to that weekly upper ATR band if we end up getting the push. But for now, it looks like you're probably only going to have another $2, maybe $3 of upside, hit the level, maybe grind at it for a little bit, just like here, before you see a pretty decent size pullback. We went from around 515.50 all the way down into the 595 area, so about a $20 down move. Similarly, since then, we've retraced all of that and then some. Still would look for the higher low setup continuation if we did see the pullback. Moving over to the Russell had a down week, 1.22%. Pulled back to my level, 238.02, held that level, got a decent little bounce on the unemployment data, which helped on that last Friday. Overall, though, you can still see this is trending up. It's definitely extended. Your resistance here is the 244.46 level. We touched that 2 weeks ago, rejected from it, broke my 241.05 level, so 238 is the critical one. 235 is your next level if we do break down from here. Otherwise, momentum slightly bearish, doesn't look super great in the short term, even though the medium term does look bullish, and you can see it here on the daily chart as well. Kind of looks like a double top. You could argue slightly higher high, but we never held those levels. Got very, very close to the previous. Could not close above the wick rejection from the 11 November candle. That high was 424.39 and the closing price here was 424.40. So basically right on top of it. You could argue 1 penny higher, but for me, that is flat. We never closed above that previous high. So for me, this is double top. Now we're pulling back. Is the 21 going to hold? Structure is still bullish until this area here breaks. Then you would expect a bigger, deeper cut. Then you would look for the retracement to the 21 EMA, reject from the 21 EMA, and then that would be a change in structure. So until that happens right now, still looks like this zone could hold in here, could hold the higher low continuation. Watching closely at the 238.02 level. But momentum slightly bearish, RSI slightly bearish. Moving over to the Russell on the Tasty charts here, you can see that doji. This is the weekly chart. We did doji and then sell weekly bearish as we just saw. Your 8 EMA support would be that 232.70 level. So that would look for a break of the one we just talked about around the 238 area. Pull back to that next area zone. Could still hold that and trend. It's been holding that over the last couple of weeks. Did see a slight pullback here almost to the 21. But if this breaks, then there's a fair amount of room. 21 is sitting at 223.49, 223.50 right in there. ATR trailing stop still quite a bit lower, 206.40. And then giving it a little bit closer look here on that daily chart, you can see over through the upper band, we knew it was going to pull back and it did. Rallied right back to it. Touched the upper band, pulled back. So far, it's been pulling back. 21 EMA right in there, 236. Need to see that hold if it's going to do it. Momentum is still bullish. You can see volume on the run says that this should still hold. There's a lot of good sentiment behind the Russell 2000, which has been underperforming historically relative to the SPY and the NASDAQ, which have been rocketing higher. Obviously, the Russell doesn't have the same exposure to big tech, which has been driving markets higher, but eventually there should be some catch up as long as the economy continues to do well, which is part of why I think we saw the Russell do a little bit better on that Friday session with the unemployment data still showing a relatively strong economy. So everything still looks okay. Some critical levels. It is in a short-term pullback, waiting to see if we get the continuation or if this does pull back and break structure. But for right now, it is bullish. Moving over to the Dow here on the weekly, you can see it was also negative on the week, 0.65 to the downside, almost engulfing the previous candle. You still have a gap left here from mid-November, gapped from the 18 to the 25 candle. Momentum stepping down, RSI was overbought, stepping down to 68.91. Interesting to see that. Support right now, 441.43. We'll see if it pulls back to that level. If it does, realistically, it's probably going to mean reversion. 9 EMA sitting all the way down at 435.17. Might take a few weeks to get there. Looking at the daily chart, you can see we've already taken out that 9, headed towards the 21. Again, pretty much in line with the level, 441.43. Look at this volume profile. If it gets through here, you can see that gap. It's going to fill it quickly, most likely. Hit the 21, hit VWAP. And you can see that daily momentum almost back to bearish conditions already. Looks very similar to these previous tops where you had a topping pattern pulled back through the 21 here all the way to the 55, and then this one only to the 21 and then bounced from there. So we'll see which one we get. If it cuts through the 21, probably going to the 55 just like the previous iteration, but it could obviously hold in this area and get the resumption from there. Either one's possible, but in the short term, it does look like it's going lower. Moving over to the equal weighted S&Ps, this is the more concerning one here. You can see it was a big down candle, 1.3%. engulfed the previous, filled the gap here nearly at the level 184.84. We're out of this trading range. We've been below it before. Realistically, I should add another level here. Right there makes sense to me, right at the low from this 9 September candle, marks the bottom here, 28 October, and this 18 November candle. So if we do push down to that lower range, your support would come in here around 182.93. 9 EMA also sitting there, momentum stepping down, big volume on that candle. You can see last two candles not very good on those bullish candles, and then you got the down candle with double the volume. So momentum bearish, probably going to pull back some more again. So short term, looks like we could see some pullbacks on the broader market. Tech still looking very, very good. Everything else, not so much. Moving over to the ratios, big surprises here. We got the SPY jumping while the Russell turned down. We talked about this potentially being a wick rejection last week. I thought we'd probably push down, at least touch the level and then bounce, but we got an immediate reversal, big wick rejection. Now we're in the zone waiting to see if it rejects from here. It's still technically a higher low from here, but you could argue maybe lower low from here. So waiting to see what we end up getting. You're in a zone of resistance for sure. 55 EMA right there at 253, just above it, 21 EMA, 255. It's been slowly trending down, but you can see this momentum stepping to bullish. If it breaks above the SMA on the RSI, maybe we see some more Russell underperformance, the SPY outperforming a little bit over the next week or two potentially. And I think this is really being driven by tech here. So you can see big up move here. Let's go ahead and extend out the trend right to the low of that candle in there. So we broke above this trend line, momentum bullish, RSI bullish. Tech had a massive week. We were thinking this was going to fade a little bit more again to touch the support there at 434. Ended up bouncing immediately, opened basically flat and went straight up all week, almost to the next level, 355, just missing it barely there. Either way, big tech outperformance, big up candle. You would expect a little bit more outperformance there. Momentum bullish, RSI bullish. Seems like the NASDAQ is probably going to be the best on the board, and the Russell might underperform here over the next week or two. Moving over to the SPX divided by the M2 money supply, you can see we did touch that level there. 282.52 was the high, 282.50 was the level, so we touched another level on this indicator. This is the weekly chart, and remember, this is the SPX divided by the total amount of money in M2, and the only times we've ever seen this higher goes all the way back to January of 99 through pretty much all the way here, October of 2000. And obviously this was a time period in markets that was super bullish, and we did stay bullish for a long time. Like I said, January of 99 here until November of 2000. So we stayed in this range for a long time. But then when we broke down from this range, it was absolutely catastrophic. Had an absolutely huge move. This was about 57% from top to bottom, and then we ended up going lower. So if you wanted to include that kind of move, that was about 75% from top to bottom on this indicator before this very long-term bull run since then. So just keep in mind, markets are probably extended, probably in bubble territory. They will likely be much cheaper in the future. When is the future? Who knows? In terms of short-term trading, everything continues to be bullish, and we'll be keeping an eye out for a structure like this where you start to see breakdowns, changes in structure, changes through these levels, start to see these kind of death crosses in here, bigger moves down, changes in structure, low, lower low, high, lower high, those kind of things. You start to see that change in structure. And right here, we're just not seeing that, right? So every time it's a high, higher high, low, higher low, higher low, higher low. So for right now, the structure is still very much bullish. Just keep in mind, long-term investing, probably not a great time to be in it. I'm still buying things like bonds, buying things like REITs that continue to pay dividends at a pretty elevated rate due to the interest rate environment, but just buying the overall market, not doing it so much here recently. Moving over to the Mag 7 charts here, you can see we've been in this uptrend. We are continuing to pinch on this trading range, but so far it continues to look good. Up candle, 7%, big week here for the Mag 7. Usually when you kind of see those weeks, that is the top of the move, kind of a culmination style move. If we zoom in here, you can see the last time we saw a candle like that was back here on the 1 July week. We ended up getting 4 weeks in a row of down move after that. So something to consider there. We're at a critical trend line. Let's go ahead and extend out this trend line here. If you did get the candle break continuation, that would give you some room up to around 337, which would be another really strong move here for the Mag 7 from current price. That would be about another 5.25% or so. Momentum still very bullish. It is overbought. We'll see if we end up getting a pullback. You can see, like I said, 1 July candle, big down move after. Also big up week here on the 4 November candle. That was 7%. And we also got a 3% pullback immediately after that. So up candles on the Mag 7 seem to be followed by some bearishness, at least in the short term. Overall, still very much bullish, but definitely pretty extended at a 72.16 here on the RSI indicator, key resistance area. Doesn't mean we can't go higher, maybe wick this level and then reject from there. Something more like this, where you get a big up candle, continuation candle, then a doji, touch the level, wick rejection, and then continuation lower before holding that higher low, continuation higher. So couple of scenarios to watch. It is extended, it is at resistance, but that doesn't mean that it can't go a little bit higher. Still very much a bullish structure. Moving over to Apple and Microsoft, both of these looking very, very good here. Apple up 2.3%, broke through all the levels, all-time high close, all-time high wick highs. Everything looks very bullish. Momentum swinging to bullish. We continue to see those steps. We should get a couple more weeks there. It's almost overbought, so maybe we get 1, maybe 2 more weeks, but it can absolutely go. We've seen it before where it gets overbought. Just zooming out here, you can see this previous move into this zone before we're getting this breakout here now. Got all the way up to an RSI of 75, and it took a little bit of choppiness for that to happen. So you got overbought conditions back here 10 July. And we didn't top out on the move until 15 July. So we had a couple of weeks of bullishness, continuation, even though it was overbought. Momentum was super bullish there, basically straight up candles. Then we had a very, very slight pullback, and now we're getting this kind of continuation move. And we broke out of this consolidation as well. So everything looks good there on Apple. And then looking at Microsoft, not quite the same thesis. We had a high wick rejection consolidation, but now we've broken out of this trading range with the big up candle. 4.75%. We've been watching this as a potential bearish setup, but we stayed in this trading range since basically the end of July all the way up until the end of November, and now we got the breakout to the upside. Based on this, you would expect a push back to those all-time highs, which is up here at 466.57 back here on the 1 July week. That was the top, and then you can see those 4 big bear candles in a row, 3%, 3.5%, 2 3/4, and then nearly 4%. We ended up going much lower to that 55 and then retracing most of that move. Now we've held in this consolidation, held the 55, multiple retests in that zone, and now it seems to be breaking higher. Again, stocks are expensive, but they continue to go higher, and I would be looking for a retest of those all-time highs from here, which is about another 5% move. So we'll see how it plays out. Everything still looks good for Microsoft. Moving over to Tesla and NVIDIA. Tesla had a massive week, 12.7%. Momentum super bullish, super overbought, continues to be a straight rocket ship. We had a very slight hesitation in here for 3 weeks, and now we've got the continuation breakout. Probably headed to those all-time highs at 414.50. That's the high back here. On that 1 November of 21 week, Tesla has had a really choppy couple of years in here, but now we're headed back to those all-time highs. Gives you a little bit of room potential. Your current support is 384.20, 384.29. Clean breakout above that level. I would look for continuation to the next one. Continues to be a rocket ship, as opposed to NVIDIA, which does not look so good. It did manage to stay positive on the week, about 3%, but it continues to reject off that 144.42 level. You can see we broke below it here. 18 November, big wick rejection. Couldn't test it, went lower, tested it again, rejected from there. This seems to be a topping pattern in my opinion. Obviously the structure is still very much bullish up and to the right here. I've had a couple of pullbacks, very slightly higher high, but for me I still think this is going to go a little bit lower in the short term. You can see your momentum is also bearish there. And just throwing this down to the daily chart for a moment, you can see high, slightly lower high on closing basis, lower high again with a low, lower low, waiting to see if this is another lower low down into that 130 area. So NVIDIA not looking so good, and if this starts to sell, that could have an impact on the broader markets. Right now they still look very good, but this is the biggest stock in the world and it's starting to show some weakness. Moving over to Amazon and Alphabet. Amazon having an absolutely massive week, 9.21% momentum, super bullish, RSI overbought 71.16, closed right at the high of the candle. The high was 227.15 and the closing price was 227.03, so just 12 cents off of the high. Very, very strong close, clean breakout above all levels, really no structure, broke through here. Who knows where it's going? If we extend these out, that would give you some potential price targets, but those are very, very high. It's not impossible with how strong this has been, in the 260s maybe, who knows, but very powerful, clean breakout, everything super bullish. And then looking at Google here, you can see it did end up holding VWAP in here after the retest, tested it here, tested the trend, bounced, up candle, still in this same kind of trading range it's been in for a while. 170.95 continues to be a nice little level to buy the breakout here, trade it up to the 179 level, sell that, take the profits, wait for it to retrace. Markets are still super bullish, so maybe it's getting a little bit of a sympathy play here. I'm still very concerned about the DOJ thing. The CEO came out and said they're going to fight it tooth and nail. They have a ton of competition. They still feel confident they're going to be in good shape, but overall, on a short-term trading basis, it is bullish. Look for a retest of the highs, maybe up in the 183 area. If you break 179.40, the trade is to the 185 area. And you could argue low, higher low here, looking for the high, slightly higher high. If you clean breakout, maybe we head to the all-time highs in the 193 area. So short term, maybe 3.5%. If you get the continuation, that would be about 9.5% higher. Moving over to staples and discretionaries. Staples moving lower 1%, whereas discretionaries went up 4.7%. Obviously, Amazon and Tesla driving discretionaries, rocketing them higher up to a 79.2 on the RSI. Momentum super bullish, super extended, at a clear point of resistance. But in terms of staples, high, lower high. Probably going to get a little bit lower low here. Momentum starting to turn. RSI, perfect setup here. Breakdown, retest of the SMA breakdown. Big volume on that. So at this point, you would expect it to go lower. We got the clean breakout, continuation higher. Didn't really culminate that move, but now it looks like we're going to move a little lower there. But really, I want to focus on this long-term staples chart here. So if you want to draw this trend line yourself, you can see it goes all the way back here to the lows of February 2003. Marks a clean bottom here in August of 2006. Goes all the way to the highs here, September of 2018. You can see marks that level perfectly in here. A little bit choppy here through the 2020s, touch the level again, March 21, kind of choppy on the level, candle break continuation moves here in April of 22. And then once again, we are at this critical point. Is it going to break through it? It certainly has before. You can see obviously here, pushed way above it and then eventually came back down. In terms of long-term pricing, we have not stayed above that trend line for a very long time. You can see we did stay above it here for a while, broke down into the 2008, 2009, and we just have not been above it for a long time. It's a very aggressive trend line, so it makes sense that we would stay below it. But once again, we're testing the underside of that level. Are we going to get a clean breakthrough, kind of bubble action? And just for the perspective here, you can see even though we broke out here and did go much higher, which resulted in about a 42% move from the breakout there, ultimately, we ended up going lower about 9% there and then really 14% lower from the breakout point. So another thing to consider, if you get the breakout, trade it for what it's worth. You start to see those topping patterns in here where you get multiple weeks of sideways chop, start to see lower lows happening. That is when you need to be cautious. But for now, clear resistance. We'll wait to see if it breaks out or not. It is very extended, and the indicators are showing that as well. And moving over here to communications and transports, just to show some more dichotomy in markets, you can see communication all-time highs, momentum bullish, super overbought at a 79.36 here on the weekly, probably headed toward this upward trend at around 103.77. Looks very, very powerful. Versus transports here down 4.18%, flashing a break in structure here, probably going to pull back deeper. It's already below the 9 EMA, just barely, probably headed down to VWAP at least at 70.74. My level 71.13, but realistically this is probably going at least to the 21, down at a 68.58 level. It's been uptrending for a while. We're starting to see a break in structure. Breakdown, probably going to see a lower high, continuation lower. Momentum breaking down, RSI breaking down. So interesting to see tech, communications, all those companies still doing very, very well versus the real economy kind of represented more by transports breaking down here. And this is also representative in the Dow transport theory, right? So the Dow usually follows the transports or the transports follow the Dow depending on which one's leading markets. Right now, transports going lower first. The Dow did go lower, but not as strongly. Will the Dow catch up to the transports? Is this showing the start of some economic weakness? It's hard to say for now, but it is flashing a pretty big warning sign in my opinion. Moving over to wood and crude. It's been a while since we've talked about wood, and it's really been chopping sideways here. We had a big downtrend, touched some levels, caught a little bit of a bounce, had a down week this week in the same trading range we've been in for a long time. Got here back in December of 23, had some big highs, had some big lows, but we're still in that same trading range. still holding up fairly well. We had this kind of structure here. We're breaking out of that sideways now. It's not really moving in any major direction. Momentum moving towards bullish, RSI slightly bearish. But the bigger news here for me is oil. So oil had a down week. It's at a critical level, 66.50 here for light crude. It's been above this level for a long time. We got above it back here in May of 21, which is really the first time we'd been above it for a long time. We had some movement here in 2018, choppy action back below it. But before that, we got above the trend back here in August 2009 and back below it back here in December of 2014. So this is a critical level here. If we end up holding this level, that could be interesting. If we start to see some bounces, if oil prices start to go a little bit higher, that could be tough for the economy. But if this continues to break here, maybe that offers some relief to the US consumer. Just be aware of it if you're trading oil stocks. Critical level here. It's potentially a buying opportunity. Last couple times we've been in this zone, ended up holding and pushing up into the 90s. Touched it back here, pushed up into the 86 area. Now we're in a basing formation, waiting to see what happens. Is it going to hold in here? It's been chopping on this trend. Really hasn't been able to go higher yet, but something to watch for this week. Oil, critical level there at 66.50. Moving over to Breadth. Big down moves on Breadth. 20-day moving down 43%. Huge down candle there. We didn't see if this pushes into the 36 area. We'll see how that plays. Momentum is bearish. RSI is bearish. And it's probably going to go at least a little bit lower. Something like this where you get a down candle about another half of that original candle. And then looking at the 50-day, continuing to hit this trend line continues to be important. We did overthrow it here, but ended up getting back below it. Now we're retesting that level, gap to it here on the open, and then continued to fall through the week down into this zone here. Again, probably going to go a little bit lower, something like this, down candle, continuation lower. In my opinion, momentum bearish, RSI bearish. Moving over to 200-day breadth, you can see we got a down candle there as well. The critical level 76.04, touched that last week. This week touched it again, rejected from there right down to the next level. Probably going to go a little bit lower, like I said. The low of this range has been around the 64.74 level. Probably going to get into there. Momentum bearish, RSI bearish. No changes here. Again, 200-day breadth has been here for about a year. And at this point, it seems like it's going to go back down to the mid-range. We'll see how that plays. But again, short-term bearish. Moving over to the dollar here on the weekly, we got the down candle last week. Slight retracement this week, lower high setup. Momentum continues to step down. I still think this is going to go at least a little bit lower. Want to see the retest of the SMA on the RSI. So slight bounce maybe, continuation lower, touch the level, then we might see the continuation higher. If this continues to fade a little bit, that should hold up equities, at least in the short term. But this is a breakout above this kind of consolidation high, if that's what you want to call it. We got all the way up to that 108 level we have not seen since back here on 21 November of 22. And the dollar continues to look very strong. This is just a shorter term pullback in my opinion. But like I said, short term bearish until we find some major support. Moving over to bonds, JNK and TLT, you can see JNK was down just a smidgen coming off of that really strong candle. We were looking for a little bit more push to the 200. I still think it's going to go. Momentum is still bullish. RSI doesn't look as good. Interesting there. Breakdown, retest, breakdown. If we get some follow through on that, maybe it is going to go lower. This is going to be a consolidation and then a breakdown, but it's been trending up for a while. I don't really see that breaking, especially with the overall macro environment of a potential rate cut coming soon. That should give bonds a little bit more strength. And we have been seeing that really on both here. TLT ended up positive 0.45. Still looking for this to break through that 21. That was key resistance here. You can see breakdown, retest, breakdown. Good setup. Continuation lower into the zone of support. Now we're looking for the retest here. That 21 is sitting at 95.12. Still want to see it break through to that 96.50 level. I think it will go. Momentum stepping to bullish. RSI stepping to bullish. Might take a little bit longer to do it. Maybe we see a double bottom or a higher low setup, but I do think this low is going to be the low. Moving over to the VIX, you can see we pushed down to the key level 1275, closed at 1276. Momentum still bearish, RSI still bearish. We'll see if this ends up being a long zone of consolidation like it was here before. We had a couple of spikes here and there, but nothing crazy. Then we got here again, basically 3 months in that area from the beginning of May all the way until mid-July. Before we had a big spike, and you can see it here, November all the way up until March. This was your Santa Claus rally time period last year. Maybe that's what we're going to see again, with a couple of spikes here and there, but mostly consolidation around this area. But for now, still looks bearish. Markets are relatively calm, but it is a key zone of support. Moving over to my accounts, I think I was net about $1,000 on the week, which is good. Not as good as it could have been considering how bullish the NASDAQ was. We did push really deep into my calls. I'm definitely concerned we are hitting some key areas of resistance, but the NASDAQ has looked super bullish, and you have to trade the markets that you have. And then the Russell here, pretty choppy sideways. I was able to mitigate pretty much all of that with covered calls, which continues to be a good strategy there. I do think we're in a short-term little pullback. I think we'll hold some support in there, which is why I'm still in the position, just trying to collect some credits on that as we go. Overall, Q's still bullish, Russell probably a little bit bearish, but I don't think it'll be too deep of a pullback. I still think seasonality is in support of the Russell as we head into the new year. Let me know down in the comments section what you think of the bond markets or fixed income instruments or REITs. What are you buying for the medium to long term? Or are you just continuing to pile money into the stock market at these valuations? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.